Well, we are into the year 2020, and before we know it, we will have corn planters back in the fields as we get ready for another great, hopefully wonderful crop with yields that'll be better than what we saw last year, considering what Mother Nature threw at us. We're going to find out what the outlook is as we go from pre-plant to really post-harvest. Jeff Peterson is joining us today with Heartland Farm Partners. And Jeff, first and foremost, we've got corn in the bin. What's demand been like?
I know, and that's the thing. It's always fun this time of year to just kind of take a look at everything, Susan. And we like to start off on the demand side on this 19 crop, the one we got tucked away after harvest. And so far, demand's been a little soft so far. If you look at overall our total use, we're down about 218 million bushels from last year. But believe it or not, we're down about 510 million bushels from 2 years ago. So demand's been off. But you know, we haven't had the amount of supply, so that's what's kept things kind of in check a little bit. So that's overall how we're sitting so far.
What about ethanol demand? How's that going?
You know, on the ethanol side, you know, I was concerned earlier, and I am still concerned about that industry. The margins just aren't as good as we'd like to see there, and they're actually having to pay up on the basis side. You know, so far year to date, what we're looking at is we're down about 1.8%. And that's not too far off a pace. USDA is saying that we should be unchanged versus last year. So we are going to need to see that pick up, but at least so far we're still within striking distance to hit our numbers.
We've got a lot of competition in the global market for corn. How's that all coming together, especially with exports?
You know, this time of year definitely it's always a concern. But the positive part about it is we're getting to a point now where Brazil is running out of corn a little bit, and they're actually pulling in some corn from Argentina. And our exports so far, USDA has them down 14% below last year. But when we take into account the exports, what's been sold, what's yet to be shipped yet, and take that all into account, though, we're down about 41%. So we've got some work to do if we're going to go ahead in our export number. But there's a few positive things I think that are happening overall with ultimately the safrinha corn crop, which makes up over 70% of Brazil's crop, getting planted probably 1 to 2 to 3 weeks later. That does go ahead and give us a little bit longer window to be able to send some exports out. And right now, we're very competitive on our price, so that's a bright note in our way to getting all caught up.
Is there some folks banking on that, per se?
Yeah, there definitely is. In order to get caught up there, we definitely are going to have to be competitive for a while here. Or what we'll see in future reports, we'll have to see them go ahead and bring that export number down.
So how would you describe then the current supply-demand situation for this corn market?
You know, I think the best way to always do it, there's so many numbers, and what we like to do, Susan, is we like to always get back and talk about ending stocks, which is our total supply minus our total demand. But then we really like to take it a step further, and we like to take that ending stock number and divide it by our total demand to get us a stocks to use percentage. And what we find overall is we've got our ending stocks in orange, we've got our blue line ultimately as our stocks to use, and even though our stocks have been tightening up, we've still got more than abundant supply. And as a matter of fact, when we look back to last year at this time, our stocks to use percentage is still higher. So we're in no threat of running out, but yet we're going to have to really be focused on this next year's crop, and that's what we like to do this time of year.
So then how is production and demand looking when you look at it from a global perspective?
Well, you know, the big picture, we step back and we say we've got a few things going on out there we wish were a little different on the world side. One of those things is we wish African swine fever, we wish that China would go ahead and be able to get that under control so that we would be able to see some stronger numbers on the corn side, on the world side. We also really wish we wouldn't have heard China end up saying that they aren't going to go forward with their ethanol mandate, because we really could have used that. But as we dig in and look at the numbers, our data goes back to 1989, and we've got the production numbers are in orange, and then we have the usage numbers are actually in the blue. And for the 19 crop year and the 18 crop year, our usage actually was higher than production as we look at it on a world basis. That wasn't the case as we looked at the U.S., but that's our situation. So, you know, in big picture, that's positive. It's setting things up, but we still are going to have some help from Mother Nature to have some positive prices down the road.
How about that stocks to use ratio?
Yeah, and that's a great question, Susan, and to dig into that, so we've then once again went back and looked to 1989, and I think a way to really probably bring this to everybody's attention, the best way, is to put it all in one chart. And what we've got is we've got the U.S. numbers in blue, we've got the world numbers in orange, and what you'll find is that if we go back over the last 3 years, actually our stocks on the world basis have been tightening up. But they still are high enough, though, to basically note that we have no fear of running out. And even though we are tightening up a little bit on the U.S. side, we're still in a case there where we have plenty of corn. And I think overall that's why, in the whole big picture of things, that's why the speculative traders, that's why the funds are still short this market. They aren't concerned that we're going to get short on corn, and then they're looking ahead to what next year is going to bring also.
Well, speaking of next year, we've kind of looked at 2019. As we go into 2020, what are your thoughts? What are you thinking acres might be for corn?
You know, that's a great question, because really our focus going forward is all about planted acres, and it's also all going to be about yield also. And we know those are a lot of factors, but there's so many things on the planted acreage side. So let's kind of dig into those. Last year, and the best way to kind of look at this, Susan, is we went back and looked at what our planted acres have been all the way back through 1976. And what we can find is back in the 80s, we had a different time than what this is. It was all supply-side controls, we had set-aside acres. And as we move forward, though, you can see that we've had a steady uptrend in acres that happened into the 2000s, and much of that was really focused on the fact that we had the push for ethanol in the RFS1 and RFS2. But then if you look at what we had this last year for 2019, we had a big pullback in acres. And that was really all a big function of what we ended up having going on the prevent plant side. So we're going to have to spend some time talking about prevent plant.
Well, looking at prevent plant, last year we knew that there were a lot of struggles, but was it a surprise as low as those acres were?
You know, it was, and I think that happened over time with progression. You know, early on what ended up happening is that conditions started off wet. And then all of a sudden everybody got to a point where it was not just wet, but it was so wet that there was fear that we weren't going to be able to get the acres planted. And then when the dust settled, prevent plant acres were very, very high. We actually ended up with prevent plant acres at 18.2 million acres. And we've got our data going back to 2007, and we can see that on average, 3.84 million acres is kind of the average where we're at. And prior to the 2019 year, the highest we'd ever been would have been about 8.6 million acres. And the big things that we're focused on in 2020, there's still a lot of unknowns on how the acres are going to come in yet. North Dakota, South Dakota, Minnesota, parts of Michigan and Wisconsin are still extremely wet. As a matter of fact, as we look back through some of the data on precip, and in particular in North Dakota, it's the wettest it's been in the September through November timeframe, going back 125 years. And the other thing that's going on even on the South Dakota side, and South Dakota had the highest amount of prevent plant in the nation. They were sitting there at 3.9 million acres. They're the wettest they've been in 121 years. So as you know, we can see that those are some very wet conditions out there. And so as a result, what we're starting off with is we're saying about 4 million acres of prevent plant. We might be a little low there, and we have to adjust that according to what we end up seeing for the weather going forward.
It's going to definitely make it interesting for 2020. And what about the CRP ground? How much is that going to be accounted into planning this year?
Well, and that's a great question, because as we take a look at CRP, actually CRP, Susan, you've hit a big important topic there. And the main reason we probably have got the prices where we do right now is a combination of a lot of things going on the demand side, but on the production side, if we go back and take a look at our CRP, we actually peaked out on CRP back in 2007 at 36.8 million acres. And currently we're setting at 22 million acres. Now, so that's almost 15 million acres that came back into production out of the CRP. Now, the Farm Bill actually gave us a cap, and then as part of the Farm Bill allows that cap to be raised each year as we go forward. Our numbers would suggest that there could be as many as 24.5 million acres in CRP, and we're setting at 22. That's why you're seeing some open enrollments happen. But we don't think basically they're going to fill up and get up to the cap, just the prices and how they're handling it in regard to what they're paying. We think there could be about 1 million acres that go into the CRP, more than we would have maybe been last year at this time.
So would any of those prevent plant acres possibly be enrolled in CRP because they were so wet last year, and knowing that there's a potential there?
That's a great question. You know, that I'm not going to rule that out. That's definitely very possible that some of that could happen. I think in some areas there's also some of this ground that maybe isn't as productive as it's been is going to go ahead and get pulled in. So I think that's going to play a part in it.
So looking at those prevent plant acres of 2019, what can we factor in for 2020 to possibly be planted?
Yeah, and we're going to stay flexible. The best thing I'd say about our marketing plan and our outlook as we go forward this year, we're going to build in a lot of flexibility because we know as wet as it is up north that a lot of conditions can change, and we could have a really dry spring and could get a lot of acres brought back in. But as we dig through the numbers, the best way I can explain this, Susan, is we went back and we said, let's look at corn, bean, and wheat acres. And what we said is that out of those acres that were in prevent plant, let's say we bring out 14 million of those. And that's where we said there'd still be the 4 million acres of prevent plant. Let's say 1 million of those goes over to CRP. That leaves us with about 13 million acres that could get pulled into the corn, beans, and wheat. Now, what USDA has already told us is they've already told us basically that the hard red winter wheat acres are really, they're down from where they're at. So we know where those acres are at. But we're really looking to add 13 million acres back into production compared to where we were at last year.
So does that mean those planted acres could be higher than in past years?
That's a great point, and that's one that comes up a lot. A lot of people are really questioning, well, how can we talk about additional acres or higher acres? And so the best way we can probably take a look at that is let's go back and look at just back through 2015. And what we've included here is we've taken corn acres, soybean acres, wheat acres, and then on the wheat we went in and even broke them down by class. And you can see that between all those commodities back in 2015, there was about 225.7 million acres that was planted. And what we're talking about now is about 223, almost 224 million acres. We are talking 13 million more acres than what there would last year, but our acreage numbers are down a little bit compared to what past years have been.
So what's the breakdown then going to be for this 2020 crop year?
That's the million-dollar question.
You don't have the $1 million?
Well, I tell you, exactly. So what we said is that let's start with getting our acres, and then let's go ahead and just say, you know what if we just go ahead and pull them on about a 50-50 rotation, or a little bit heavier corn. So let's bring 7 million more acres into corn. Let's bring 6 million more acres into soybeans, Susan, and what that looks like is 96.7 million acres of corn. Now, that isn't the most corn acres we've ever planted, but it's right up there in the number 2 slot. And on the bean side, that would bring 6 million acres higher than last year. That'd put us at about 82.1. Now, we've had a number of years higher than that, but we had just such a big pullback last year. And wheat, we're planting the least amount of wheat that we've planted in history. So
pulling USDA into this, what do you think their yields will be when they first come out?
Well, and there's always a lot of debate on that. And our best way, so how we approach it 2 different ways. One, we go in and we run and look at what do we see as the long-term trend. And when we look at the long-term trend, we go back to 1976. And when we run those numbers, we get a 178 yield. And then we check that against, has USDA given us any hints on what we physically could end up having and what they've told us? And they have given us some hints. They actually came out in November with some of their baseline numbers. And those baseline numbers, they talk about acres, they talk about yield, but probably the most important thing they talk about there is the yield. And the yield that they talked about there was actually a 178.5. As we dug deeper into the research, what we found is a lot of times the numbers that they use in that baseline number in November does carry over into the outlook numbers. The outlook numbers will come out at the end of February, and then a lot of times they're within a few tenths, because keep in mind, we won't see the official balance sheet for the 2020 crop until May, but a lot of times those outlook numbers then will flow through into the May numbers. And so we're comfortable using a 178 yield at this time.
So then how would corn production compare to other years?
It's going to be big. And that's what gets us a little bit concerned about this market. So we take our acres, we take them up 7 million. We take what we would have as a normal amount of harvested compared to planted acres. And what that actually brings us in at is about 15.818 billion bushels. And that'll be a record. The data set and the data that we're showing you on the chart here goes back to 02. The last time we'd have been over 15 billion, would have taken us back into the 16 crop year. So it's been a number of years since we've been that high on the production side.
That's crazy. So what is supply and demand going to look like for 2020?
Well, and that's what we want to get to, because ultimately to be able to talk about price, we really need to be able to work our way through here and compare how does those stocks to use ratios. So what we did is that we went in and said, let's look at some different scenarios. And the chart we've got up for you now, I've highlighted in red on the far right-hand side what are possible scenarios for the 2021 crop year. Now keep in mind that 20 crop year doesn't start until September, and that goes around through August 31st of 2021. But as we feed all the numbers in, when we use the latest USDA data coming out of the January report, and we also raise demand, Susan, we might be a little high here, about 800 million bushels, that gives us a 2.975 billion bushel crop. Currently, keep in mind, we're at 1.892, but to put it in terms of the factors we've been talking about though, stocks to use wise, the 19 crop out of the January report was 13.4% stocks to use. We're talking about for the 20 crop, 20.1% stocks to use numbers.
So how do ending stocks then compare when you look year over year?
And what we always like to do is that we talk about so many numbers, so we do like to go back to our ending stocks and stocks to use numbers. So I can probably best show you this, Susan. We went back and looked at the data through 1997, and we're showing the ending stocks are in orange, and then what we did is we put the stocks to use ratio from the 97 crop through the 2019 crop were in blue. And as we talked about earlier, we can see that our ending stocks on a raw number has been coming down. Our stocks to use is down slightly. But then what we did is on the far right-hand side in red, the column, we plotted on there the ending stock numbers. And you can see it goes right off the chart. You know, we're up to just nearly 3 billion. And then we said, well, let's take a look at our stocks to use number, and that brings us up slightly over 20%. Susan, last time we'd have been at a 20% or around 20% stocks to use, we'd have had to go clear back to really 04. So it's a number of years, and I'm not saying for a moment that the prices will take us all the way back to what we had then, but that's the last time we had this really amount of stocks out there.
Well, speaking of prices, it's kind of the elephant in the room. We haven't talked about what we'll see for corn prices in 2020.
No, we really haven't, and that's really kind of the point we're at right now. And we're a little concerned about this year. I think, and I've been doing this since working in the commodities market since the early 90s, and I really do believe that this is probably going to be one of the hardest years to make marketing decisions at what I had, and a lot of it's all because of these prevent plant acres and trying to know how much of those is going to get planted. But as we walk this forward and say, what could we expect in regard to prices, I think the best way to show that, Susan, is to go take a look at a weekly corn chart. And what I've got up in front of us is that it's not a lot of data. It goes back through 2014. And what you'll notice is that there are some higher prices. You'll see 417, 438, 439. Even a 412, and then the one that really stands out on here is that 464, and that 464 was a price level that we got to this last summer. But as we've talked about here, the reason we got to that price level was because of the large amount of prevent plant and the tightening of stocks and the fact that the funds really jumped on that and bought it. But what I've done, Susan, I've highlighted an area on the chart, and that area on the chart runs from January last year at this time. And what I did is I took it through basically halfway through May. And our concerning thing, and each of those individual bars that you see on this chart represent 1 week of trade. And you'll notice last year we were about at this same price point as what we are now. But if you notice the chart as it goes from where the left side of the box is really to where the right side of the box is, you'll notice that we, on the front months, on our nearby contract, went all the way from up in the 380s all the way down to 335, okay? Now, what we're talking about, though, is what are prices looking like for December 20 for new crop? Well, what it did is it went all the way down to 363. And so what we're concerned about here is that if we don't see something come in, now we've had a number of things that could come in. We've talked about prevent plant acres if for some reason it turned out wet. But big picture, I think the parting thought I want to leave here, Susan, is that big picture, soybeans need about 6 million acres, okay? Corn can afford to give up acres, but yet we're talking about bringing in 13 million acres. Mm-hmm. We're going to have something else that's going to have to come into play here if we're not going to end up at some of these longer term lower prices. Now, what does this stocks to use percentage? If we're talking about a 20% stocks to use for the 20 crop, and we're talking about a 13.4% stocks to use for the 19 crop, what that would suggest, if those numbers came through on the 20 crop, that would be talking sub $3 corn. Now that's on the low side of things,
Right.
and that would be as we get out there towards harvest, okay? Now what does that mean here in the next, maybe month and a half? We've been up in the 4 to 405 area. I think these areas in here are selling opportunities. I think there's an outside chance we could get a bounce up into the 410 area on D's 20, but I think that's probably going to be about it. So I think the biggest thing we could be doing this year is making sure we know what our break-evens are, making sure we're getting comfortable with what our insured bushels are, and I think we have to be selling in here, Susan.
A lot of pencil to paper over the next 6 to 8 months.
Oh, there really is a lot.
It's going to make for some interesting times, like you said, some tough marketing decisions yet to be made.
And you want to build flexibility in. And then the thing I want everybody to be comfortable about is that from the marketing side, there's really two fears, right? So we've laid out this outlook, but we've got these two fears. The fear of not producing, we have to overcome that. But we can do that because we know we've got the crop insurance side. But the other part is that fear of missing out on a higher price. And the thing I would like to say is that they can build flexibility in their marketing plan that can give them confidence here to sell and still be able to get a higher price down the road. They just got to build that flexibility in.
All right, sounds good. Thanks so much. Jeff Peterson's been joining us today from Heartland Farm Partners. Thanks for joining us.